Hello guys and girls, welcome back to my YouTube channel. Now in today's video I want to teach you something called failed liquidity engineering. This concept made us get this sell entry on volatility 25-1S index, and it is a concept that has been making us a lot of winning trades. So I decided to share this secret with you from A to Z. It is my hope that you will learn a lot from this video. Now the first thing that you have to do always is you have to start on the highest time frame. We as day traders, the 24 hours time frame or the daily time frame is the highest time frame that we normally start with. Why? Because on this time frame, it's a time frame where we get a general outline or a general outlook of where this market is expected to go or where this market came from. Because as it says, once you know the history of something, it is easier for you to be able to predict its next step perfectly. Now looking on the daily time frame on this pair right here, we can be seen that this market was moving in an uptrend direction, and that can be seen by this series of higher highs and higher lows that we are moving. Now the moment the market broke this point right here, it's a point where we said, okay, the market has provided us with a shift of the market structure. What is a shift of the market structure? A shift of the market structure simply means a change of series. For example, if the market was moving in series of higher highs and higher lows in this way, once the market breaks the previous higher high, the previous higher low of an uptrend movement, then it can be said that the market has provided us with a shift, because the market will start moving in series of lower lows and lower highs. That's what we mean by a shift of the market structure for those beginner traders who are having trouble in knowing that terminology so well. Now let's proceed to the extent where we got this sell entry as to why at the exact point that made us say okay, right now the market is selling, and how we got that sniper entry that you are seeing on the screen. Now, after getting this concept, we said, okay, the market provided us a shift. As usual, after the shift of the market structure, this was expected for the market to go above it. Now, at this point, we said, okay, let us go on the lower time frame, because the market has already provided us a shift, and now we are sure that this market is going to sell. That it is when we went on the 1 hour time frame progressively. Some people after the daily time frame like to go on the 4 hour time frame. Some people like to go on the 1 hour time frame, but based on the time frame coordination that I taught you in the earlier videos, the time frame coordinations, if you start on the daily time frame, you go on the 1 hour time frame, then you go on the 50-minute time frame for entries. Now on the daily time, now on the 1 hour time frame right here, it can be seen that we also got the shift of the market structure can be easily visible on this time frame right here. We can see after the break of this structural level right here, then this was made to be our new higher high, our new higher low right here, and the market broke below this structural level. Now this gives us a confidence that this market has already provided us with a shift, and we are to go any selling opportunity at this point, it has been taken very serious, because the market has provided us with a shift of the market structure. Now that's where we went and see, okay, here it's a point where almost those guys who have been learning liquidity engineering in the toilets and so on, it's a place where most of the people were having or were hoping to enter their trades right here, because they were hoping that, okay, the market broke this structural level at this point, and they were hoping for themselves, I don't know where did they learn forex trading, they were hoping for the market that it will come on this price right here, because this they will say to themselves, okay, here some people have been liquidated and this is a valid entry point. But again, you can see the market broke below this level right here. Now, since you are students of Forex Clubhouse and I've been teaching you how to trade the failed liquidity engineering, you said, okay, this is where most of those guys, the smart money concept, the order brokers, the breakout traders have been taken out of this trade. So this is a valid failed liquidity engineering level. So what we did right here, we said, okay, we are waiting for the market to come on this point right here, and we are going to enter into this trade at this point right here, while hoping for a stop loss be on the most recent highest standard deviation right here. So we said, okay, let's enter our trades on on this point right here. Although we did not get an actual pointer here, to be more safe, our points were on 60-14 right here, and our stop losses just on 60-30s, because once you go on the lower time frame, that's where you can refine your stop loss and get the most recent standard deviation at where point or the swing point was actually is. So that is how we got this trade, and these trades or these calls were shared on the Telegram group. If you want to join, the link can be found in the description below, and that group, it is completely free. It's where I share some insights of forex trading, and I share these calls sometimes. So if you want to join, the link can be found in the description below. I wish you a happy trading day, and make sure you like this video and you subscribe to this channel for more informative videos, so that in the end you too can be able to go into the forex market and take these calls on your own. I wish you a happy trading day, and bye bye.